Hi, I'm Anne Rosen with Keller Williams here in Chicago. With rising prices and higher interest rates, a lot of people are asking me, are we in a housing bubble or is it about to burst? It's an understandable question. If you remember the 2008 crash, or even if you've just seen the headlines, you know how unsettling the idea of a housing bubble can feel. So let's break it down together. What a bubble actually is, what's happening in Chicago right now, and what the experts are predicting for our market. Number one, what a bubble really means. First, let's define what we mean by housing bubble. A bubble happens when home prices rise much faster than incomes and real demand can support. Essentially, prices get inflated beyond what's sustainable. And just like any bubble, eventually it bursts. When that happens, you see a sudden and dramatic drop in home prices. We saw this most clearly back in 2008. Lending standards were extremely loose. A lot of buyers had mortgages they truly couldn't afford. And when the market shifted, foreclosures skyrocketed. That flood of distressed properties caused prices to tumble quickly. That's the textbook definition of a housing bubble. Rapid, unsustainable growth followed by a steep crash. Number two, Chicago's current market. Now let's talk about Chicago today. In 2025, yes, home prices in Chicago are higher than they were just a few years ago, but here's the important part. The growth has been steady and modest, not explosive. Most neighborhoods are seeing increases in the range of about 3 to 5% per year. Compare that to some coastal cities where double-digit appreciation, 15 or even 20% year over year, was happening during the pandemic surge. That's the kind of growth that raises bubble concerns. Chicago's more gradual pace actually helps protect us. We don't have the same dramatic peaks that tend to lead to the equally dramatic valleys. Number three, supply and demand. Another key factor is supply and demand. Here in Chicago, inventory, the number of homes for sale, remains limited. This is especially true for move-in ready homes under $500,000, which are in high demand. Think about it this way. If there are 10 serious buyers looking in a neighborhood but only 3 good homes on the market, these homes are going to attract strong offers. That demand keeps prices stable. Now, higher interest rates have definitely slowed down some buyer activity, but at the same time, many potential sellers are holding off too because they don't want to give up their lower mortgage rates. So the limited supply is balancing out the reduced demand. That's very different from a bubble where supply surges, demand collapses, and prices spiral downward. Number four, lending standards are stronger. One of the biggest differences between now and the bubble of 2008 is lending standards. Back then, it was much easier to qualify for a mortgage, sometimes even without proving your income or assets. That created a lot of risky loans, and when homeowners couldn't keep up with payments, it led to widespread defaults. Today, lending is much stricter. Buyers are going through income verification credit checks and debt-to-income ratio requirements. That means that people buying homes now are generally well qualified. Fewer risky loans in the system means less likelihood of a wave of foreclosures that could push the market into a crash. Number five, expert outlook. So what are the experts saying about Chicago's outlook? Most housing economists predict our market will continue with slower, steady growth. In some neighborhoods, prices may flatten or even dip slightly, especially if mortgage rates stay high. But across the board, the consensus is clear. We are not headed for a collapse. And here's another important point. Chicago is still most affordable compared to many other major U.S. cities. When you look at the cost of housing relative to local incomes, we are in a healthier balance than places like San Francisco, Los Angeles, or New York. That makes our market lower for risk overall. So, is Chicago in a housing bubble? The consensus is no. Prices may level off, and the market may feel slower than it did in the frenzied days of a couple years ago, but we're not on the brink of a crash. If you're buying or selling, the real key is to understand your specific neighborhood and your personal timeline. Some areas are hotter than others, and your goals may be different from your neighbors. I'm Anne Rosen with Keller Williams in Chicago, and I'm here to make sense of this market with clarity and confidence.